Microphone check, 1, 2, 2.
It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey there, Tyrone Jackson. You and I are back together for another episode of Trading Stocks Made Easy. Now, because of what's going on recently in the market, I have to talk to you about a topic that's a little bit on the serious side. And I'm talking about pump and dump schemes and how to avoid trading scams. Now, I started the show with a microphone check, 1, 2, 1, 2. And my favorite engineer, Kevin, said to me, that's really not a great way to start the show. I said, why? He goes, because you're really not giving me the audio level that you'll be speaking at. So see, we can be very spontaneous here. And I'm looking at Kevin now. He's giving me a thumbs up like, there you go, Tyrone. You're on your way. Now, as it relates to you and I, there's some things you should know about in 2021 that seem to be dominating the digital world. And they are pump and dump schemes as well as scams. So in today's episode, I'm going to take you through something that's been around for a long time, which is pump and dump. So let's talk about what that means. Well, there are certain communities online these days that talk up certain stocks, try to get as many people as they possibly can to buy the shares. And while the shares are rapidly rising, the organizer of the scheme is selling. Now, we've seen this go on for years and years and years in the stock market, and pump and dump is nothing new. There are a couple of variations on it. There's the first, when someone has a blog or a series of bloggers who are supposed to be giving you free stock market advice, suddenly talk up a stock that's usually under $25. Well, those shares that are under $25 can be easily manipulated simply because of the size of something called the float. Shares under $25 frequently don't have a lot of institutional involvement in them. So you know how I'm always talking to you about big money, right? Well, big money is usually not in stocks that are under $25. And for those of you who need a little clarification on that, when I say big money, I mean banks, insurance companies, college endowments like Harvard or Yale, right? As well as hedge funds. Now, hedge funds run billions of dollars of money on Wall Street, and they're not into taking silly risks. They want to be with mature companies, stocks that are very often in the Dow Jones Industrial Average and the S&P 500, because when they go in and they buy shares, they're buying in, let's say, $1 million lots. So traders who trade in $1 million lots are rarely in smaller issues that trade under $25. So we see this a lot in the cannabis business, where a lot of people think they're going to get rich off of trading some unknown cannabis stock that has gone public and the public doesn't know about. Bloggers love these smaller names because it's very easy to convince people to drop $500, $600, $700 into a stock that has a small float, talk it up, and while you're talking it up, you're selling. These are the kind of things that you really need to pay attention to and why you need a financial education. So there's general pump and dump, and then there's something called earnings pump and dump. So let me give you this scam that is very popular online, and I don't want you to put your money in some no-name stock without knowing about this scam. So we know that publicly traded companies report their earnings as well as their top-line revenue to the public once every 90 days in the form of a quarterly report. Well, there are some bloggers, both big and small, who say this company's earnings date is actually coming out a week from now, and the whisper number, this is another thing, the whisper number says the earnings are going to be absolutely fabulous. Now is the time to buy the shares. In other words, these bloggers are talking up the stock to the uneducated trader, the uneducated investor, and they're saying now is the time to buy. And while they're trying to push these well-known names up, they are selling. So A blogger or scammer's job is to get you to believe a story about a particular stock, and it usually involves making really, really fast money. You see, it's really hard to say, now's the time to get Microsoft stock because 5 years from now, it's going to rise. Not really a good story. But now's the time to get XYZ stock because in the next 90 days, it's going to explode. Who does that attract? People who are greedy, people who are gambling, people who don't have a financial education and have never seen this scheme before. So if you're going to put your own money in the stock market, then you have to be aware that there are bloggers around the world who congregate together and talk up a no-name stock and promise you millions and millions of dollars as the stock radically rises over the next week or so. And while you're buying, they're what? Selling. So pump and dump hurts the little guy and the little girl in the end. Why? Because it plays to the tendency of greed and the desire to make fast megabucks, which, let me tell you, does not happen in the stock market very often. It definitely doesn't happen in cannabis stocks, and it doesn't happen in other sectors. Now, recently we had a company who saw its stock price go bonkers and then suddenly reverse. Now, when you're an experienced trader, here's what makes this game really interesting. Rather than just owning shares, you can actually own derivatives on shares. And those derivatives that I'm going to talk about here in this segment are called call options and put options. So if you're an experienced trader, you're going to rely on technical indicators that tell you when to purchase your call options and when to purchase your put options. Now, let me break the game down a little bit further by explaining this to you. A call option is the right to buy a stock, and it grows exponentially when the stock price rises. A put option is the right to sell a stock or force someone to buy shares, and put options rise when stocks fall. Now, isn't it fascinating that if you own shares, you can also own call options in case the stock radically rises, your call options radically go up in value. And when the stock drops, you can own put options, which radically increase in value as the stock is falling. And as I always like to say, the stock market is one game and 100 ways to play it. So if I am an active trader, can I own put options that rise when the stock drops and call options that rise when the stock rises, in addition to owning the shares? The answer, of course, is yes. So who do you think makes most of the money on Wall Street when a stock rises? The answer is institutional traders who are educated, who know how to use call options as derivatives when they expect a stock to rise. When they expect a stock to dump or decline, experienced traders would know to purchase put options. So the question is, do I know how to use call and put options to play volatile stocks? The answer is yes. Although I prefer to play the market from a bullish point of view, but I do have in my toolbox the tools to make money when stocks go down. I prefer not to use them too often because when stocks are in decline, you need a lot of bad news to profit off a stock dropping very quickly. That's why I, again, prefer to own derivatives on stocks that are rising, that I'm bullish on. So I explain this to you because there are people who are great at every aspect of trading. You can only get great at every aspect of trading when you put greed in the closet and you open your mind to a financial education. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's Red Hot Stock Trades and Investment Strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
So this is interesting. Before the break, I was talking to you about this idea of pump and dump during a normal period. Earnings pump and dump, where bloggers talk up the earnings and they try to get the stock to rise. And then the idea of using call and put options. Now, to many people, this is a big surprise to know that you can buy a stock and place a bet that it will decline. In the case of call and put options, I can buy a stock, buy a call option so that I get the exponential rise from the stock, and buy a put at the same time. In case it drops, I can make money on that side of the trade. And that is called a straddle. Okay? Now, there are other ways in which you can make money when stocks drop, and those are called spreads. Now, spreads are my favorite derivative trades. They're complex, but you got to understand they can be enormously profitable if a stock drops or stays the same, and we call that being neutral. Okay? So since this is Trading Stocks Made Easy and not like my online derivatives trading course, I just want you to know that when I encourage you to get a financial education, the stock market is a whole nother world that most people don't know about. Even Congress doesn't understand purchasing derivatives so that if your favorite stock declines, you can make money from that. How do I know? I've watched many hearings in which some of the biggest firms on Wall Street are being questioned, and some congressman or senator will say, "You actually placed the bet after you bought the stock? You placed the bet that the stock would decline?" And that person goes, "Yes, sir." Like, that's standard if you're trading a lot of money, right? Okay, so I want you to be aware that there are pump and dump schemes, but most of those pump and dump schemes won't be on Dow stocks, the Dow 30, or members of the S&P 500. Why? There's too much institutional money. Those companies pay dividends. So by trading the Dow and the S&P, which is what I always encourage, you're kind of protected. It's when you go off the beaten path and you get involved with stocks that are under $25 a share, or in the cannabis market, which I do love. I just don't think now's the time to own any of those shares. But if you stay in the Dow and the S&P, you can do really well if you're willing to be disciplined. So the other thing that I wanted to talk to you about is when you know you've made an impact as a brand builder or influencer online. And this one is personal. Did you know that there are people who are pretending to be me, Tyrone Jackson, the wealthy investor, on YouTube and Instagram? So when I post, they create a shadow account that looks like the wealthy investor, and they begin a dialogue with you, and they start to ask you for your money. Now, I would never ask you for your money ever because that's not what I do. I don't manage other people's money. I am an influencer and an educator. So when you see someone getting back to you and then asking you to send them some money or giving you an email address where you can contact them, most of you understand that's probably not me. Now, my intention when I started this brand online many, many years ago was I really, truly, from the heart and from my soul, I really want to educate people about the opportunities that exist in the stock market. And as it stands now, I've been able to help people from all over the world successfully trade and develop a financial education to make intelligent, disciplined decisions about how they want to trade their money. Now, I don't tell people what to trade. I will share with you from time to time the stocks that I like and how I'm trading them. And if you decide you want to trade them the same way, have at it. I also teach a disciplined approach to the stock market, not get rich quick. So as you're searching out there and you're seeing my face pop up on Facebook or YouTube or in a banner ad online, that's probably coming from me because I just want to have the privilege of teaching you how to get that financial education so you can change your life and perhaps a few generations that will come after you. Golden rule, I will never ask you for your money. So it's kind of a double-edged sword for me. I'm proud to have this brand that has reached worldwide status. That's really wonderful. I love my time with you, being able to explain what we talked about on today's show, pump and dump schemes and things like that. But I'm not into stealing from people. So be intelligent, be smart, stay open, stay positive, and most importantly, if you're going to put your money in the stock market, make sure you have the right financial education and that you're not letting greed overcome your decision making. Well, that's it for today. No more pump and dumps. Well, we're never going to get rid of those, but at least you know what they are. And don't take advice from anybody who's posing to be me online. I'd appreciate that. With that said, I'll see you right here next week on the next episode of Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.